All right, guys, in this video, I'm going to show you one of my favorite Forex strategies. This is probably going to be the easiest one for you guys to mark up and find opportunities, but it's going to be one that's not going to yield you many trade setups each week. It's going to be only maybe 1 to 3 at most. With this strategy, and there's a couple different ways you can go about, marking this up. The easiest way that I found is simply marking up the highs and the lows of the previous week on your trading view. So what you can do each week is you can come here and you can mark up highs and lows on the weekly time frame. Now you don't have to do this. Like if you were on the 4-hour time frame and you were looking at the chart and you saw highs, you can mark up stuff that way too. For me, I just like doing it this way. And you can do the same exact thing, guys, on the daily time frame, the 4-hour. You can mark up highs and lows of each session. So this is relative, right? This doesn't have to be just a weekly sweep of liquidity thing. But for sake of this, it will be, okay? So here's how, and this is a trade that we took just this last week. So coming into last week, let's go ahead and look at this. So mark up the high, mark up the low, boom, start of a new week. And then usually what I'm doing from there, guys, is I'm dropping down to the 1 hour, okay, to find where this is going to give us our setup. And I'm only entering trades, like I told you guys, I'm mostly only entering trades during the New York kill zone. Okay, so if it's with outside that kill zone, I'm usually not entering the trade. And this is a CAD pair, so this is also on the same exact time zone as the New York Stock Exchange. That's when the Canadian market is open. So this is what we had to work with. So price comes down and we sweep the weekly low. We sweep the previous weekly low, and then price pushes to the upside. And then now, 8 a.m. Central Standard Time, this is when I'm looking at price. And what I did here is I remember I dropped down to the 15-minute time frame, boom, looked at this. I said, is there anything prevalent that we could enter off of? Well, how can we factor in our other methodologies with this? We can draw up our PD array, our premium and discount price, and one of two entry options were available. One, this fair value gap, which lines up right with that 50%. And also lines up with all of this structure right here, breaker block, etc. So that definitely could have been an entry, and it wasn't my entry. And the reason it wasn't my entry is because I actually didn't notice this until a little bit later in the morning, and by that time we had already dropped down a little bit further. But let's say you didn't want to take a trade right at that 50%. Maybe you really wanted price to come into the discount for buying pressure. Well, here on the 30-minute time frame, here's a fair value gap. And I'm obviously giving away the trade that I took on this, but it is what it is. So this is how you can find other methodologies. You could definitely enter right here. Absolutely, you could have entered right there, guys. So I don't want you to think that like that's a bad entry or whatever. I have the benefit of hindsight right now, so that's why I'm marking up the lower fair value gap. But yes, you could have entered off this fair value gap right here. Your stop loss would have been quite a bit bigger because you would be putting your stop below this low, which would be 50 pips because GBP CAD, it's a GBP pair, so it's, a lot of pips. So, ideally, if you're someone that likes to have a stop loss that's less than 30 pips, then obviously, you're going to be looking for a little bit better of an entry. So just to spare you guys some time, let's go ahead and draw this out. So here's what we see, though. We see the sweep of liquidity. So now we're anticipating a push to the upside. We had a sweep of sell-side liquidity. But we're only going to take a trade if we get confirmations that price is willing to do that. Here on the 1 hour, we had this last push down, sweeping liquidity again during London session, pushed up into New York, and now we've closed above, breaking structure on the 1 hour. So this is a 1 hour breakup structure right here on this candle up, but dropping down to a 15-minute to get a little bit better of an entry. I was actually going to talk about this in another video, but this will actually work out as well here as just a bonus. So another thing to consider is optimal trade entry. Optimal trade entry is between 61.8 and 78.6 Fibonacci. So again, everything needs to be in congruence. Time and price, liquidity sweep, clear willingness to move in your direction. Okay, these are all factors that will never, ever, ever change. So adding things like the Fibonacci, adding things like equilibrium, it's all bonus. It's added confluence. That's all it is. Okay, to help you refine, find a better entry, add strength to your trade, etc. Okay, so that is how you would do that. And if you were to target take profits for Forex, usually my Forex trades are a little bit more in terms of risk to reward. They're usually always more. So here's how you can play this. Okay, so take profit 1. In this example, what I did for this trade is I actually did this as TP1 because this was the most relevant high, and this was almost a 1 to 2. So at this, I TP'd again the same way, 50%, stop to break even. That's how I pretty much do every take profit 1, by the way. And then when it comes to finding your ultimate take profits, well, one of your ultimate take profits can be, if you wanted to swing it this far, you could swing it all the way to the opposite weekly liquidity. So we swept the weekly low first, so now we could turn around and target the previous weekly high. Okay, so you could do that, but you could also be partialing, which I think you should be. You should be partialing along the way. So, okay, if we were to look for take profits, where can we find those at? Well, if we take our handy dandy PD array tool again and just mark up the previous week to where we're at currently, well, we know that equilibrium is right here. This lines up as well, coinkadink, with these highs, this fair value gap. So to me, that's another strong take profit. And then if you wanted another take profit, let's just look around these other time frames. Use all these time frames to your advantage. There's no reason to only be married to one time frame, guys. Here's another fair value gap, lines up with a breaker block. Sounds like an amazing take profit level to me. So let's just take the beginning of that fair value gap as a take profit. Let's drop back down to the 1 hour. And let's just see how this plays out. We'll ease in slowly. We tap into the trade right here during the 10 o'clock hour. So again, right at the very end of that, that session there that I'm looking for trades. Chopped around, and we're on the hour now. So keep in mind, this is a little bit longer of a trade. And when you're taking trades off the weekly sweeps of liquidity, they're going to be more of like a swing trade, guys. Some trades you might only hold for a day or two. Others you might maybe hold it all week long. And this was actually an all week long type of a trade. So boom, okay. So TP1 got hit. We're risk-free. Risk-free TP1 got hit the next London session. So we entered during New York, held it overnight. London session, boom, take profit 1 got hit, 50% off the table, which was almost a 1% gain because it was almost a 1 to 2. And now we're risk-free. So now we'll see what happens from here. Boom, take profit 2 got hit, take another partial off the table. If you want, you could move your trail your stop loss up even higher below these lows. See where it plays out from here. Boom, take profit 3 got hit. And at this point, we're into Wednesday. So Wednesday, middle of the day. So after AM session for Wednesday, we've hit take profit 3 on GBP CAD. And you could trail your stop again. You could trail your stop to right here. But playing this out again. Boom. Final take profit got hit at the very beginning of New York session on Friday. So literally traded Monday, or what is it? Yeah, Monday entry, Friday, you held the trade all week long, and then you hit ultimate take profit, which was 246 pips, just going to the previous weekly high. So that is how you can use the weekly sweeps as your trade entry reason, and this is obviously using fair value gaps as the entry model on that. There is, let's just see if it showed itself here. You could have done the break of structure entry as well. Okay, you could have done the break of structure entry as well. However, if you're doing the break of structure entry, I do it on the 1 hour time frame because otherwise I think you're going to get a lot of fake outs. So I just prefer to do it on the 1 hour time frame. And to be honest with you guys, I believe you wouldn't have even gotten it. You really wouldn't have even gotten it until like this is your break of structure. And if you're wanting to take that trade and, you know, have a just ridiculous risk to reward, like if you want to take that trade, boom, stop goes below here. I mean, you're talking a 75 pip stop. And just to get to a 1-to-1, you're targeting, you know, all the way up here. So maybe not, but, you know, maybe you entered off that first fair value gap that we talked about on the 15, you know, this order block on the 1 hour, 41 pip stop, so a little bit bigger stop loss, but then it could have been pretty similar. So, you know, if you're waiting for break of structures, that's how you're playing it. You're kind of still playing it the exact same way, right? So let's just go ahead and I want to look around here and see. There was one other trade that we took this week that I can go over with you guys for this entry model video, and it was, where are we at here? CAD JPY, I believe. Yeah, so CAD JPY, same thing. Okay, so let's go ahead and delete this and delete that, and we'll delete that as well. So let's go to the weekly. We already have the levels marked up. So boom, weekly high, weekly low. Previous week high, previous week low. Okay, drop down to the 1 hour time frame. And let's go ahead and why not drop into bar replay mode. And again, we'll see if time and price plays into a fact. It definitely plays into the fact that that's when we took our trade. But I just want to see something here to show you guys the concepts and the importance of putting it all together. So, you know, let's say you were doing a 1 hour break of structure. Let's just pretend, right? So boom, liquidity sweep, break of structure. We're waiting for a 1 hour break of structure. As of right now, that break of structure would be right here because that's the most recent low on the 1 hour. So let's just look. And then the next break of structure would be right here, because down candle, and this was the very low of that sequence that it came. So break of structure would be here. Price comes down, doesn't close below, so no break of structure yet. Still doesn't close below, no break of structure. However, we'll use this as the new low. Okay, we can move that low back up to this new sequence. And then boom. So there would have been that break of structure right there before. This was kind of in a no man's land because this is an hour before New York session even opens. But this wasn't the trade that we took. This wasn't the trade that we took. But let's just pretend that you did take this trade. Why not? Because let's just see how it plays out. So break of structure, you could have entered right there. Stop above the high, kind of a pretty hefty stop loss. So in reality, you'd want to wait for a pullback. We have the benefit of hindsight here, but pulls back to this order block. Boom, entry right there at that order block. Stop above the high, let's just say. No idea how this plays out. And let's just say take profit one was, I'd probably target here, to be honest, because this is the most recent structure. This was the push up that swept liquidity. Fair value gap right in this candle as well. And it's a 1 to 2. So let's just see how this plays out. I wanna say this hit stop loss. If this was the trade you took. Yes, it did. So it hit stop loss. Okay, great. It hit stop loss going off that break of structure entry model. So again here, 1 hour, you want to see proof that price is willing to go to the downside. And I'll show you what I saw when I took the trade or when I called out the trade. Okay, so what I saw was price came down in the 1 hour. I knew we had already swept the weekly high. And then, what did I see here? Relative equal lows. So clear liquidity pool that we can go take out and target. So, okay, now at this point, it's like, where's our entry going to be? Well, now we can use OTE. I like to use OTE with the time and price. So knowing that we're within the time of New York session, so now we're in that sweet spot. Remember I said I like to enter between 7 a.m. Central Standard Time and about 10 a.m. Central Standard Time. And I will enter, you know, an hour later if I need to, but most of the time you're going to get all the setups in that 3 hour window, which is 8 a.m. Eastern to 11 a.m. Eastern. So I wanted to see a pullback into this OTE region, which is the 78.6 and 61.8, also lined up with this order block. So this was the thought process on this, was to boom, take an entry like here, right at that 61.8, right at the beginning of that order block. Stop loss goes right above the high, only a 22 pip stop loss. Take profit 1, these relative equal lows, because it's a very clear, very obvious target for a TP1. And then again, same goes down here. Take profit 2 right there at that fair value gap. Let's go ahead and mark that green. And then further TPs, again, you could use the opposing weekly liquidity. That's a hefty swing. Literally almost 300 pips. That's actually crazy. I would not expect price to move that far without any news in the week. So that's where you can factor news into your analysis. But screw it. We'll just leave it for now. And as far as other liquidity levels go, yeah, I mean, what sticks out? To me, in the 1 hour, this sticks out. This low sticks out. You could target that instead if you would like. But otherwise, yeah, I like this a lot. Let's just bring this up to here. This is already over, it's 117 pips. Just to there, 1 to 5 in total. So what happens is price chops around. Doesn't get quite there. Almost did during that AM session, right? We're on the 1 hour time frame still. So now we're into Asia session. We're into the nighttime. So no trade came that day. Now we're working into London session, which is going to pick up right about there. Boom. Beginning of London, literally shoots up into there. If you had a limit order set, boom, got triggered in. Or if you were awake, you could have market executed, I mean. And then boom, price chops around for the couple hours of the beginning of London, starts to sell off, hit take profit 1, right as I would have been waking up for the day at the beginning of New York session. So boom, wake up, take profit 1 was hit, remove your risk, stop to break even, and let the rest run. See what happens. Price pulls up in London or New York session. Looks like it fills this fair value gap right there. How ironic. And then let's see what we do. Obviously we sell off from here. Taps that fair value gap one more time during Asia session, it looks like, that next day. Sells off again. Boom. Next New York session hits take profit 2. You know, you could trail your stop loss to like right here at this high. Let's see if it gets to TP3. I don't remember if it did. It did. Okay, great. Thursday, Asia session. And this is a yen pair, so that makes sense that it would have movement during Asia session, but not compared to London and New York. But yeah, nonetheless, take profit 3 gets hit, and let's just see how this played out. Wow, so it sold off quite a bit into Friday. New York session right there. Where did it go? Did it take out this low? It did. It took out this low. Boom. So that could have been ultimate take profit. Obviously, hindsight's 2020. Did not catch that full move. I can promise you that. Caught it to right there. And then, bam. That was your ultimate take profit, which also, let's actually just go look at this. I'm curious. Let's go to the daily. It was that low right there. The most recent daily swing low. Looking at the weekly, it was this order block, aka, well, yeah, no, I guess, yeah, this would be this order block. Taps right into the open of that. Also lines up with the daily swing low. 4 hour time frame, it looks like that. So, yeah, very cool. And then if we were to draw up that PD array on this, I'd be willing to bet, sure enough, right down to equilibrium. So again, you're seeing all these concepts be relevant on every time frame, on every asset class, swing trading, intraday trading, scalping. It literally does not matter, guys. The market is going to do this stuff over and over and over and over and over again. The market is very, very, very predictable, okay? So hopefully this was helpful. You can utilize this every single week. Go take your favorite pairs. Don't go crazy with it. Like, pick a reasonable number of pairs, maybe a handful of pairs that you like to trade, and then start applying this. Take demo trades with it. Practice with it, okay? Don't go gun-ho and try to get every single weekly setup on every single thing. You want to get the best setups in the best optimal times and, you know, be able to pull the trigger and be able to execute without over trading. So mark that up. You'll get 1 to 3 of those a week most likely. For me, I'm usually getting 1 or 2 of those a week. Some of them I don't always catch because if they activate during London, if I wasn't paying attention, you know, I'll miss out on them. But every once in a while, you know, you're going to get some really amazing moves like I just went over with you guys on CAD JPY and on GBP CAD. Both CAD pairs for me that last week played out very, very nicely for us. And hopefully that was helpful. And then we'll spend a little bit more time going over the OTE strategy specifically and how you can use it on the smaller time frames with the USD pairs in the next video. So I'll see you guys there.